Let's talk about transitioning from sole proprietorship to partnership and what are the tax implications, what are the things you need to be aware of. So here's an overview I want you to pay attention to. So the thing is that when we talk about sole proprietorship, you're not filing you're not filing something with the state tax authorities, right? You basically have a business. There's no formal sort of filing process. Maybe the only thing you might need to have is if you have a DBA. So if you have a DBA, doing business as, then you need to actually register that with the state tax authorities. But otherwise, when you have a sole proprietorship, there is no sort of formal process you have to go through. You just happen to be an independent contractor to make money. And then as long as you file your taxes, you are good to go. Now, if you want to transition to partnership, things can be a little convoluted depending upon the partnership we're talking about and depending also upon the state you're in. So basically, if you wanted to go with a general partnership, then there's no problem. Now, if you want to have a limited partnership or a limited liability partnership, then you might have to file additional paperwork with your state. Again, when we talk about going from sole proprietorship to a partnership, everything happens at the state level. There's nothing you have to do with the IRS. Nothing you have to do with the IRS. The only thing is that with the IRS, you might have to ask them to elect LLC taxation, if you will. But other than that, there's no condition you have to fulfill. Now, depending upon the situation you have, if you remain sole proprietorship, in other words, if this remains a one-person business at the federal level, you can only file Schedule C on your Form 1040. In other words, the IRS will continue to regard you as a disregarded entity. In other words, you're not a business per se, okay? But if you were to associate yourself with other partners, 2 or 3 or 4, I mean more than 2, and you happen to have an LLP or an LP, then you can actually elect to be taxed as an LLC. In other words, as a partnership. Please make sure that you pay attention to a few things. Make sure that you organize the partnership under your state law, prepare articles of organization, prepare an operating agreement, a partnership agreement, that's how you call it, and think about your accounting method. Are you going with a cash method or accrual method? And those are really important. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now let's talk about the process that allows you to convert from a sole proprietorship to a partnership. The thing is that basically, one thing I want to clarify here is that the process doesn't have to be convoluted. It depends on, again, as I said, the structure of the new partnership, and depends on also the level of liability protection you want to get from the new partnership. Because if you just go from sole proprietorship to general partnership with no change here, then there's nothing else you have to do, because a sole proprietorship is just a reduced version of a general partnership. In other words, general partnership, you have several people who are treated as, let's say, a combined version of a sole proprietorship. And but if you wanted to go for LP or LP, then you need to file paperwork with your state. And your condition will also change, because in terms of taxes, because basically when we talk about LP or LP, you're going to have to file Form 1065, and you have to issue Schedule K1. In other words, you will ask the IRS to be taxed as a partnership, which means before you were filing your taxes on Schedule C, Form 1040, and going forward, you're asking the IRS to accept your Schedule K1 and Form 1065, which means that you are still filing taxes on your personal return, but you're not actually paying taxes. You're filing taxes at 2 levels. You're filing taxes on your Form 1065, but you're not paying any taxes there, but you're paying taxes on your Form 1040 and Schedule C. What I want to say here is that the possibilities are endless. In other words, you can also elect to be taxed as an S corporation, which means that instead of filing Form 1065, you're filing Form 1120S. But here, as we're talking about partnership, if you are a partnership, you are basically going to file Form 1065 and Schedule K1. Remember that when we talk about a partnership, all 50 states in the union right now allow sole proprietors to organize as partnerships. So there are no restrictions whatsoever. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how to transition from sole proprietor to partnership. Let me give you a few pro tips here. So as you're trying to transition from sole proprietorship to partnership, you might want to consider LLP or LLC. So because there are benefits of organizing your business as an LLP, LLP, or LLC. So basically, when you change your sole proprietorship to an LLC, for instance, you will retain the freedom and flexibility you need to run your business while gaining some essential protections for yourself and your personal assets. And so here are some of the main benefits that an LLP or LLC can give you. So, by the way, when I talk about LLP, I'm talking about limited liability protection, limited liability partnership, not protection, limited liability partnership. Okay. So what are the benefits here? You will have liability protection to shield you from the actions of your employees. As a sole proprietor, an employee who behaves inappropriately or carelessly may put your personal assets at risk. With an LLP or an LLC, as well as the other states, like in New York, in Jersey, in Florida, and Georgia, as well as in other states, that risk goes away because it separates your personal assets from the company. In regards to the tax implications of switching from a sole proprietorship to an LLP or an LLC, you won't need to change the way you report your business activities to the IRS. The IRS allows sole proprietors who form an LLP or LLC to continue reporting their income on Schedule C of Form 1040. There are no additional filings required. There is less paperwork involved when forming an LLP or LLC compared to the other business organizations. You will need an operating agreement or a partnership agreement, even if you are the LLC or GP sole member. If there are multiple members, you will need to specify each member's ownership stake in the business. In addition, information will need to be included about how and when the LLP or LLC structure may be changed. So compared with limited partnerships, for instance, LLPs have more flexibilities in how they distribute their profits. That gives you the option of profit sharing with minority members at a level you feel is appropriate. So it's one of those things where you have to pay attention to. And the most important benefit is that the partnership structure offers you protection so that your personal assets are not put at risk if someone sues your company. Now let's talk about the risk of organizing as a partnership, let's say LLP or LLC. In many cases, switching your sole proprietorship to a limited liability company or a limited liability partnership makes sense. That said, there are some risks associated with this business structure. So here is what you need to know. You need to really know. So incorporating as an LLC or LLP doesn't exempt you from paying self-employment taxes. You will still need to contribute to Medicare and Social Security number. No, you still need to contribute to Medicare and Social Security, paying both the employers and the employees portions of the taxes. As a result, your personal tax liability will be higher than it would be if you formed a corporation, for instance. And LLCs and LLPs only last while all members remain active and living. If a member leaves or dies, the LLP or LLC becomes invalid. You will then need to reincorporate your business, which can be time-consuming and expensive. And also, the roles of LLC members, or partners for that matter, are not clearly defined by the structure of the LLC or LP the way that would be with a corporation. It's important to specify roles in your operating agreement to avoid confusion and disruption. So having this clearly defined will lead to a smoother running LP or LLC, where each member knows exactly what they should and should not be doing in the first place. So this may seem time-consuming upfront, but it will be beneficial in the end. You can believe me on that. And so provided you understand the risks and where possible, take possible steps to mitigate them, then changing your company from a sole proprietor to an LLP or LLC actually can be beneficial depending upon how you structure it. And please, if you have any question, always enlist the help of an accountant or a CPA or an EA or a lawyer, or you can ask us in the comment section below, and we'll certainly get back to you. We'll review your question and we'll get back to you. Not a problem. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about how to transition from sole proprietor to partnership and how to get things done the proper way. Now let's talk about when to switch from a sole proprietorship to an LLP to a partnership. Okay. Now, when should you consider switching from a sole proprietorship to a partnership? Now, that's a question that only you know the answer to, but we can only give you some advice on signs that might indicate it is time to make the change. So let's say your business carries a high degree of liability risk. So with a sole proprietorship, you don't have anything to shield your personal assets from claims against your company. That means what? It means you could lose your savings or even your home if someone sued you and won. So when I'm talking about partnership here, I want to insist on the fact that we're talking about limited partnership or limited liability partnership. Because if you just had a general partnership, then the risk is still there. So what you want is you want LP or LLP. So the second criterion that you want to look at is if you want to share a profit with somebody or bring on a partner and you want more flexibility than you would have with a limited partnership, then you might want to go with an LLP. And let's say it's close to the end of the year and you want to avoid the tax implications of switching corporate structures mid-year. That's also could be another reason why you do the transition right now. Now, you may decide that your business is low risk and you don't need to change from a sole proprietor to a partnership to an LLP. If that's the case, you may want to consider buying liability insurance to get protection for yourself, because that's the other thing. So it's either you pay for insurance, so there's something were to happen, somebody were to sue you, so you are covered, or you just switch the legal structure of your company. Either way, you have to see what really works for you, because in some situations, it's just a lot better to pay the insurance company something like a premium every month than trying to really change how you operate your business. And in other cases, it might be better. It might be more interesting to actually have a legit business so that you can take advantage of other opportunities. As a matter of fact, you can actually build your business credit too. I mean, you can actually have a business credit score and so on and so forth. So this is really one of those things where you have to really think about, like, big time. So let me give you the steps. How do you switch from a sole proprietorship to a partnership? And so if you want to protect your personal assets by switching to a partnership, in other words, an LP or LP, here are simple steps to follow to make the change. Now, one thing I want to say here is that every state has different rules. So your state might have different rules than like Jersey might have different rules from Georgia, and New York has different rules from Vermont, and so on and so forth. So please check with your state authorities. So, but the steps I'm giving you are generic steps that you can actually apply across the board, not a problem. So first, you want to do a business name search on the websites of your Secretary of States, and to ensure that the business name you want to use is available. The website for the Secretary of States is where you'll be able to search business names and also begin the process of switching. Remember that the name must include partnership, general partnership. It must include LP or LP, depending upon your state. And you want to appoint a registered agent for your new LP or LLP, and you want to file an organization certificate or a partnership certificate and pay the fee. If you want to expedite the process, you can pay a fee of you can double the fee. It really depends. Every state has different rules. You want to draft actually an operating agreement. Again, sometimes it's called a partnership agreement, to specify the ownership percentages and roles of each partner, as well as guidelines for resolving disputes and dissolving the partnership. You want to register with the IRS and you want to get a new EIN. You will need to do this even if you already had an EIN for your sole proprietorship. This is what's important. So you want to open a new bank account for your new LLC or LLP for that matter. Even though you'll be paying self-employment taxes in most cases, it's still a good idea to keep your business and personal expenses separate especially if you have other members who share ownership of the LLC. And you want to apply for any necessary business licenses and permits. For example, in most cases, you'll need to get business licenses in the name of your new company. And make sure that your letterhead, business accounts, business cards, business licenses, advertising, and everything else related to your business is in the name of your new partnership. And this consistency offers you additional protection and ensures that the lines between your business and personal dealings will not be blurred. And this is kind of important. So it's one of those things where you have to see what really works for you. Now let's talk about how to switch from a partnership / LLC to a sole proprietorship, because how do you go the other way around? So is it really ever a great idea to switch from an LLC to a sole proprietorship? Let's talk about that. But the thing is, in some situation, it may be really worth it. For example, you might lose an LLC member or a partner and decide that you want to go back to being in business alone. So making the switch from a partnership / LLC to a sole proprietorship for your business is entirely up to you. And if you feel that this is actually the best thing to do, just follow the following steps. You want to close all the business tax accounts that have the LLC accounts, the LLC or the partnership company name on it. You want to fill out and submit the forms to formally dissolve the LLC in the Utah, in the state where you are. So if it's in Utah or New York or Jersey, whatever. So this can only be done by submitting the forms through the mail. You want to file your sole proprietorship with the appropriate tax authorities in the business name that you have chosen to use. So this can be your DBA, your doing business as. You want to obtain any licenses and permits that may be required. You want to get a new EIN for your business. And you also want to make changes to your letterhead and other business materials. So it's one of those things where you have to really think about what really works for you. Now, if you're currently doing business, and what will happen at the tax level is that you're going to have to go from 1065 to 1065 K1 to 1040 Schedule C. If you're currently doing business as a sole proprietor, then switching over to a limited liability company or a limited liability partnership is something that you may want to consider. And you might currently think that there is a little chance of losing your personal assets as a result of a business issue when having a sole proprietorship. But the thing is that incorporating as a partnership or as an LLC provides assurance that it won't. For most proprietors, the advantages of the limited liability protection far exceed the cost of converting to an LLC when you really think about it. So it's one of those things where you have to understand there are always ways to switch back to a sole proprietorship business structure if that ultimately works better for you and your business. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just quickly talking to you about how to transition from sole proprietorship to a partnership and what are the tax implications. So I give you the overview, the process, the pro tips, and the steps. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.